Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Tuesday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. Busy show today. Two guests on our radar. First, we'll be joined by Ryan Craver at 8:15. He's our retail expert. He's also the founder of Commerce Canal. And then at 8:35, we'll be joined by a new guest, Scott Bauer. He's a longtime veteran of the markets and options strategist. He's the CEO of Prosper Trading Academy. He will give us some ideas on the option side of the market at 8:35. In between them, before then, after them, earnings is going to be the story of the day. That's kind of the theme here. We got probably close to a dozen notable earnings reports between yesterday and today. So we'll get through as many of those as we can. And that's what I got. Joel, what's the word here overnight?
We're in the green by 2 ticks here. All-time closing high yesterday, 31.3275. Trading up at 31.3350. We had a little spike overnight. I guess there was a phone call between China and U.S. That spiked us up 12 handles higher to 31.45. That'd be a nice juicy target today. That's 12 handles away. Did have an R2 number there, but nothing tradable. On the downside, pre-market low 31.28. That's just above your daily pivot. That's your key to continued upside today. Crude back in the 58 handle, up 34 cents here, or actually 31 cents at 58.32. Gold down $1.30 at 14.5560. Silver in the red, but 2.1 cents, 16.865. And Bitcoin holding 7,000, down $65 at 7,100. Triple D, do we have a little better morning going than yesterday?
They're all good mornings here, Joel. Just depends on when you log in, if you got positions working for you against you. But it's always good. It was a little bit of a rough day with Uber there yesterday. And, you know, as much as I learn here, I'm long Uber again overnight. So I don't know why. Even I must have bought it at the close for another reason. So Uber is trading up 1% here this morning. So that's helpful. But in any regard here, it was ugly day because of Uber. I ended up closing green, but it was a battle to get back to green because of the Uber trade.
All right, well, good. And we're glad.
But you know why you get bad trades? You got to work out of them. So yeah, I came back, but I mean, it didn't have to come back. So I'm not sitting in there hoping the thing comes back. You got to cut the losses when you can.
Okay, we got 2 guests today, so we're just gonna list. Spencer's gonna run the show. No tangents. We're gonna get a lot covered. Go ahead, Spencer.
Go.
All right,
let's
start with Best Buy here. Earnings from this morning, about an hour ago, they came out. Q3 EPS or adjusted EPS, $1.13 versus $1.03 in the estimate, so beat there. Sales $9.76 versus $9.7 billion, and they also raised their guidance. They raised their full year adjusted EPS guidance by about 21 cents. The low end of that was $5.60. Now it's $5.81. And their Q4 EPS guidance came in above estimates. So a strong report for Best Buy.
Can I just say that last night, the after hours traders, whoever they were, knew nothing because they were selling Best Buy. Best Buy was down going into the print last night, and DLTR was trading up $4 going into the print. Now DLTR is down 10%, and Best Buy is trading up 4%. So the after hours traders, who you think sometimes maybe get an inkling or something, they knew nothing last night, at least on these two stocks. Joel, thoughts, concerns? Let's go Best Buy first. Stocks rallying here, $3 this morning, getting up to a major resistance level. Does it take it out?
Well, pre-market high is 79 even.
That already did.
Yeah, that already did. But 77.69. That's your all-time high. That's
not your all-time high because you go back to 2018. But that's your yearly high.
You're right.
Yeah, if you go back a little bit further, those pesky little 2018 highs up at 84.37.
Yep, you're right. But 77.69, it's just all of these people that got caught in that little 4-day, 5-day sell-off, do they want their money back? And that's going to be determined at 77.69. That's been your monthly high. There's your high from 6 sessions ago. So use that as a potential resistance point, and then things open up after that. I don't know. You could use the pre-market high after that at 79 even.
Let's jump over to the Dollar Tree. So last night the stock was trading up $3.50. I wanted to short into it, but I've been burned on Dollar Tree before and I didn't have the guts. But it traded up to 116.5 last night. Just got silly. They were pushing it on fast money as well. The options guys were saying this can move, so that gave it more of a lift again. But apparently those options guys didn't know anything either. Stock's down 16 points from where it was trading last night, or 12 points from the close, whatever you want to talk. But wow, that's a big move here for DLTR.
Yeah, and the EPS, this is weird because the EPS missed and the sales beat. So mixed quarter for Q3, but then they raised their guidance. They raised their sales guidance for the full year 2019. They raised it from, not by a lot, but they raised it from a low end of $23.57 billion to $23.62 billion. So you don't often see this move on the back of a guidance raise, but here we are.
It was up in the print. Like I said, yesterday it was even up during the day and then up another 4 points. So everybody had pretty good expectations that this was going to be a pretty good print. Obviously wasn't good enough. So we're trading off. I'm just looking. Yeah, the miss though on the earnings doesn't help though. So $1.08 versus $1.13. Dollar Tree isn't one that usually misses. So I think that's probably the main reason here, even though they did do the slight raise in the guidance, but it wasn't significant, the raise either. So $100, I mean, you're at a big psychological level there. What does it do to the buy the dippers come in here? We've seen some violent moves in these dollar stocks before, though. So, like we've seen them before where they move down 10 points and then they drop another 10 points. So I'm not just jumping in here saying this one's going to bounce right back. It could, but I think it's a no touch for me here just because I've seen some violent moves here on earnings before.
Step down seller right now. Someone wants out of the stock. They want out bad. They're just pounding this thing, making lows as we speak. Before I saw us break that 100 level, I looked at some of the price action from August and September, and hit basically a high at 98. Let's call it 100. So I call it 99. Really, from 99 down to 97 to 99. That's my buy zone. If I had a short on this thing, that's what I'd be looking at. You have a couple monthly lows there, but just going down. Someone just wants out of the stock. We'll see what the pre-market low is, and perhaps use that the line to lean on. But looks like we're surely going to see 97, 91. Maybe we'll be seeing that soon.
Let's go look at Dixon. Please don't call me Shirley. DKS trading up significantly here in the pre-market. Must have blew it away. DKS,
of course,
and
Sports
it was trading up last night ahead of the print, so maybe these after-hours traders had it right. $5. This is big moves too. Dick's moves.
Wait, I don't understand the airplane reference there.
He said Shirley. Don't call me Shirley.
Yeah, I know, but
because Joel said Shirley on the chart. Do I have to explain it?
Oh,
it's not funny if you have to explain it. So Joel said Shirley about the chart.
Okay, see that I missed that.
There you go. You missed it.
I missed Joel saying Shirley.
Even I know that movie.
No, I know the movie.
He missed you saying Shirley.
Okay.
It's from Leslie Nielsen.
DKS, great movie. Q3 EPS 52 cents versus 37 cents, so it beat. Sales also beat 1.96 versus 1.91 billion dollars. They are also raising their full year EPS guidance from a low of $3.30 to a low of $3.50. So a beat, and a raise for DKS.
And a raise of the stock price here. We are taking out all of the resistance from October and November. Yep. We got to go to the weeklies to try to find new resistance, and that's not going to go any good. We got to go to the monthlies, and we're going back to 2017. Dick's breaking out. Some of these retailers, some are in the doghouse, some of them are in the penthouse. This one's in the penthouse, Joel. Why?
Because Hibbett Sports had a good report. So
Is that it?
Yeah. No.
I mean, it's crazy that some are doing well and some aren't doing well. I mean, we've had some big disappointments to kick off the earnings season with Kohl's and Macy's. And then we've had some pretty good earnings reports from the retailers as of late. So I can't get my head around it. Some are doing good, some aren't doing good.
That's always with the retailers, though. There's always big, it's big misses and big beats. But this one, following Hibbett Sports, 45.50, we're $1.50 off that. So that'd be a nice target on the upside. Since hitting that 45.50 level, your low has been at 43.50. So there's your early range, 43.50 to 45.50. Monthlies, what do we have here? And the monthlies, man, it takes a while. Nothing on the monthlies, folks, until 52.13. We're not going to see that today, but keeping an eye on the pre-market high. If it breaks below 43.50, you could see a little bit of pullback. And just Hibbett Sports hit its high in the pre-market too and sold off a little bit. So if you want to use that as an indicator for DKS, I did buy a pair of gloves there last quarter, rain gloves. They were pretty good. I was pretty satisfied with them.
Go. Earnings parade here continues. The big one from last night, the disappointment from last night, it's got to be Palo Alto Networks. PANW is trading down a cool 20-point handles here this morning. Again, the big run up into the print. So what does that mean? It means you got to blow it away to continue to go higher. It means expectations are high. It means the bar is set high. So always nervous buying stocks ahead of the earnings when they're running into it. How'd they do?
Good quarter. They beat on the EPS and they beat on the sales. The bad news is their guidance was not quite good enough. The Q2 EPS guidance missed the estimate. Q2 sales guidance was in line. The full year EPS guidance was a little bit light, and the full year.
4 years?
I'm sorry, full year.
Oh, full year. I was going to say 4 years. These guys really know what's going on.
The full year guidance, EPS guidance light, sales guidance for the year, a little bit, that was in line. So inline sales guidance light on the EPS guidance. It kind of overrides that earnings beat from yesterday.
Giving back its entire gain from November. Now we're starting to look at the gains from October. Down at 210, there's huge support. I don't know if you're getting there. That's a long ways away. You could do the 50% though. You could say the 210 to the 250 or 230. You're kind of there right now. So I think you could find some buyers on the dip on the Palo Alto Networks. I don't know if I'm coming in at 229, but below that, you can find some buyers.
Someone's coming in, Dennis. Someone definitely wants to bring some stock in here. Don't know if it's from a short or covering some puts or something. But since you spiked down, that initial bar took you down to 228.10. And then here are your lows, 28.44, 28 even. Just all in that area. So there's a buyer here, 228 to 230, just taking it, not chasing it, just sitting there on the bid, bringing it in. So there is a buyer at this level, much different than the Dollar Tree chart where, boom, it was just a step down seller. Here you still have sellers, but there is a buyer lurking here. If you had a short, be tempted to maybe join them and see if you get hit on the bids on that. Based on the daily charts, you have a low at 227.22 and then 224.57. But just someone's buying here. Is there an iceberg, Dennis, or are they showing a decent bid?
No, I don't really see any bids. And, it could just be algos. It could be anything. It could just be the technical formation that, just scalping in between. But it looks light to me everywhere. If I look at just at the pre-market here, I don't see much in the book.
Okay.
All right, let's move on to, where should we go? Let's go to Nutanix. NTNX reported earnings after the close yesterday, and it did well. NTNX reported a Q1 EPS 71-cent loss. That beat the estimate, though. 75-cent loss was the estimate there. So a beat on that as I pull the chart up here. Sales, 314 versus 306 million dollars. So beating the beat for Q1 for Nutanix. The full year sales guidance coming in line. The Q2 EPS guidance there coming in line as well.
It's been on the comeback trail, Nutanix has. So, and if we look, I'm just talking about the terrible 2018 and 2019 when stock was up over $60. Turned around really in the summer at 17 and just been slow and steady climber in the back half of 2019 here. So the trend continues, a recent trend anyways. We were down at $18 in August, and just quietly the stock has almost doubled in the last 3.5 months. So it's been coming back.
Doesn't Sean like this one? I think he might have mentioned this one, Sean Udall. I'm not sure. Nice pop here. Got a seller, just like the other stock you had, a buyer. 35.30 is your pre-market high. You bumped up there a couple times. You're a buck away. I would use that as a level. The monthly charts really don't help you out because you had a big decline. Went from 43.19 in April of this year down to 28.07. Getting some of those losses back. Let's see if you can take out that 35.5 seller. Coming back on the downside, since you made that high, you're at your lowest level at 34, or actually 33.92. So let's call 34, 35 and a half, your early range in Nutanix.
All right, it is 8:15, so let's bring on our first. Wow, that was a fast 15 minutes there.
We actually covered a lot of stocks.
Well, we tried to.
There was no tangents allowed.
No tangents. So let's see if we can bring on our guest today, Ryan Craver. Can you hear us? Oh, I think he's telling me to call him. So hold on one second.
I see him there. I see his name.
Yeah. All right. I'm gonna. You know what? I think we had this problem with Ryan last time where his Zoom wasn't working for him. So you know what? Let's take a quick break. Or I'll just why don't I dial him on the fly? Let's do that.
There you go.
I'll just call him on the fly, and we'll hear the phone ring, and we'll hope he answers. So let's see this right now. Ryan Craver again. He's a retail expert. He's also the founder of Commerce Canal. He joins our show pretty much once a quarter.
This is Ryan.
Hey, Ryan. Good morning. It's Spencer. How are you?
Good morning, man. How are you?
Here with Joel and Dennis. I was just introducing you to our audience here. So you join us about every quarter to kind of give us a breakdown of the winners and losers of the retail earnings season. I know we're not quite done yet, but we're most of the way there as far as retail earnings are concerned. So Ryan, high level here, highlights from retail earnings.
Yeah, thanks for having me. Good morning, everyone. Earnings have been much the same that we've seen in the previous quarters. So the big mass guys like the Walmarts and the Targets, they've done well. They continue to take market share away from the department stores. And the off-price guys, the TJ Maxx's, the Ross's, the Burlingtons, even this morning, they continue to produce positive year-over-year results, also stealing from the department stores. So the two winners, mass and off-price, and the big loser continues to be the department stores. We had Best Buy and Burlington report this morning. Both of them actually looked quite good relative to the rest of retail. So it's playing out much as we've seen it before. So
I've got this chart up that we like for you to send us. You send it to, you're kind enough to send it to us before you come on our show. It's just a breakdown of comps, same-store sales, sort of across the sector here. Anything that sticks out that is different from previous quarters, or is it pretty much the same story?
It's definitely the same story. I think the one name that I didn't just talk about is Costco. Costco had another blowout quarter. They continue to show very strong monthly sales. You can see that in this chart. Macy's got worse. Kohl's got worse. So, it's the same themes. I just think that for those that it's getting more negative, it's getting even more negative. And for those that it's positive, it's just improving. The guys that aren't on here are more specialty players like the Lululemons and the .coms. So Amazon's obviously noticeably absent. They're taking a bunch of market share from these combined groups. And then other players that are doing the direct-to-consumer e-commerce websites like Shopify.
Anyone where there is not a super high conviction right now, like not super positive or super negative? Is there anyone that's sort of in the middle or sort of undecided?
Probably the dollar stores. Dollar General, Dollar Tree, we've got reporting. They're kind of below the radar. No one really talks about them in retail, but they have done a decent job. The other name that often doesn't get spoken about but has had a pretty tremendous past decade is Five Below. And you probably saw the recent headlines. They're actually now selling stuff above $5, which actually should help the overall comp sales.
You can't do that.
They definitely can't, but we also said the dollar stores couldn't sell anything above $1, but they definitely have started doing that.
All right, I have a tough one for you here, Ryan. Do you follow Hugo Boss at all? This one trades OTC.
I do not.
Okay, I wasn't sure. It's OTC. I wasn't sure if you follow it or not because I had a question about that. And also, do you follow the luxury goods space? I mean, we just had this deal with Tiffany's. Is that on your radar at all?
Yeah, I mean, this LVMH behemoth, it's an impressive group of brands. I think Tiffany definitely complements it. I know that we continue to think that Tiffany's within that luxury space, but over the years, they have have gone down further and further as to the group of income earners that they're trying to attract. So for LVMH, which plays at the very, very high end of luxury, I think that this Tiffany's acquisition, regardless of price, is definitely very complimentary, and it also extends them into the lower tier luxury. So pretty amazing announcement.
Louis Vuitton trades as LVMHF for those who looking for a U.S. quote here. So, okay, I mean, you said it's the same story, the same winners: Costco, Walmart, Target. What about Home Depot here? That's one that Craver sort of includes in his group of retail winners. How does that fit into the rest of the space?
Yeah, so I think that Home Depot is definitely going to be a winner again. I think that this recent weakness definitely hurt the stock. But if I'm to pick between Home Depot and Lowe's, I'm going with Home Depot. I'm not necessarily a believer in the Lowe's CEO. I just think that what he did in his previous career with JCPenney is definitely not something that I think is going to help Lowe's. So if I'm to play the two, I definitely go after Home Depot in that space.
We're on the line with Ryan Craver, Commerce Canal Group. Joins us just about every earnings season to comment on the earnings winners and losers here. We had a question: where does eBay fit in your retail landscape?
Yeah, so eBay, pretty amazing news on the whole StubHub sale. It's also interesting that it came from an acquirer who used to run StubHub when eBay bought it way back in the day. So, and I think he got let go back in 2006. So I think they're going to continue to try and divest where they have value. StubHub was the last remaining major asset that they had. You know, they obviously spun off PayPal. They've still got some other stuff in Kijiji and the classified stuff, but I don't see them improving anytime soon. If you are a seller on e-commerce, you're going to one of two places. The first place is Amazon, for sure. The second place is Shopify. So those two names will continue to pull from eBay. I think eBay is very strong in Germany, but beyond that, I think it's going to be, market share to be taken for a long, long time. And I also think Walmart is starting to get really serious about going up against the other marketplaces, eBay and Amazon included. So I'm not necessarily thinking eBay is a good long-term e-commerce play.
Question from our chat here about BJ's. You follow that name at all?
Yeah, BJ's Wholesale Club. So they have an interesting little niche. The majority of their store footprint is Northeast. I think if you look at where they compete against Costco is absolutely killing it in terms of market share. Sam's Club is about flat and kind of focuses on a different part of the country for the most part. So I think they can exploit that niche. With that said, their e-commerce strategy is quite weak. They definitely have not focused on e-commerce, and that's where the majority of the retailers are getting their growth right now. So if you've got it, maybe I'd hold it and put a tight stop on it, but it's not something I'd look to buy at this point.
What's going on with Amazon here? Touched that magical $2,000 level. Just been a real laggard on this rally here. You're looking for them. I mean, just been in a trading range, that big one at that. Give us your comments. When's Amazon going to get back over 2,000?
Yeah, so I think that this trading sideways, they will eventually pop. I can't see, specifically with our business, anywhere where they are weak. The advertising that they're charging all the brands that we represent or sell continues to go up. It's still the best dollar spent in e-commerce today if you want to promote your brand. The growth that we're seeing in terms of sales for each one of the brands that we represent on Amazon continues to grow, and it's growing a lot faster than the rest of the industry. So, if you focus on where they're making their money. AWS is slightly slower, but it's growing, 35 to 40% on a larger base. They're doing well everywhere. They're doing very, very well everywhere. So I'm a long-term believer still to this day. I know, we've been talking for years and we go back and forth with this valuation, but it is 50% of the e-commerce growth today, and it's one you got to stay in.
Why is J.C. Penney still trading?
Great question. It is a great question. I think Ascena Group. It's just the inevitable is going to happen. They're going down. They're not going to be able to pay their rent. They will continue to close stores. They can blame it on big ticket items. They can blame it on, difficulty in the retail environment, but they just aren't moving fast enough. Ascena and JCPenney, in my view, are two that definitely you should stay completely away from.
Ryan, are there any other ones? I mean, you think about Macy's with the 10% dividend here now. Obviously, Kohl's had a disappointment because Macy's is 9.68. It's sold off or it rallied a little bit there. But is there any other big retailers that could go the JCPenney or Ascena way here? I mean, we've lost a few. We always seem to lose a few, but you think about some of these stocks and especially Macy's. I look at a 9.68% dividend, and I think, is that dividend safe? What are your thoughts?
Yeah, great question. I think Kohl's is safe for a while. I mean, granted, they are going to post low single-digit negative growth rates year over year, but I think they're fine for a long, long time. Macy's, I definitely think that the dividend is at risk. They posted nearly 3% down year over year. That their real estate valuation was incorrect. I mean, that's what kind of held it up for a long, long time. So I think they're going to have difficulty for a while. I don't see anything changing anytime soon. And the first thing they'll start to pull is the dividend.
Ryan, for those of us or people who wanting to make a Black Friday trade such that it exists, any particular names you're most bullish on around Black Friday or making a trade around the next day or week?
Yeah, so the ones that are more vocal about results are probably the ones I'd look to trade. And that one name that pops into my head that I think is most vocal about Turkey 5/Cyber Week is definitely Shopify.
Really?
Shopify is very loud and proud about the amount of volume or GMV that runs through their platform. I continue to watch every single one of the brands that we represent double down on Shopify. I continue to watch Shopify start to become the hub for your entire e-commerce business, from marketing to shipping. These guys know what they're doing, and they've got a long growth trajectory ahead of them as they include additional services. So definitely pay attention to that one over the next 2 weeks as the Cyber Week happens.
Didn't expect that answer.
Yeah, they don't even have Thanksgiving in Canada, right?
They do the first week of October. The first week of October.
Says the half Canadian.
What's going to be the hot toy? Like Cabbage Patch Dolls, or what's going to be the hot Disney Plus?
Yeah,
what's going to be the hot Christmas toy for 2019? I
don't know. You stumped me on that one, Joel. So you're making me finish off pretty poorly.
No, okay, all right. No, I just thought you might have something in mind.
AirPods Pro are going to murder.
Pro.
Amazon's going to be very loud and proud about the Echo, to the Show, to the Dot, to the Kindle, because it's going to be lower priced. One name that we definitely try and get a little bit more advertising through is Roku. So Roku's got, obviously all the TCL TVs. They've got the Hisense TVs now. They are on advertising platform.
Let's finish up with Stamps.com. When's it going to be in triple digits?
For those of you who are new listeners, this is one that we've gone back and forth on. I think it's the same as I've said before. It's the one spot that e-commerce companies can buy a lot of their shipping from, regardless of the fact that they've lost their USPS monopoly. They still are the one place that you have to go to buy postage, and they have a pretty strong platform in ShipStation.com that's used for a lot of Shopify sites. So, still bullish on them. I'm holding strong, Joel.
Okay, I'm not beating you up over it. I mean, you did have a couple major. Come on,
No,
right?
the opposite. He's good. I think
it's giving me kudos because he was, you were backing up the truck when this thing was down $40-$50. So it was a good call.
He has 2 trucks, though. That's the thing.
Oh, okay.
All right, Ryan. Thanks a lot.
Thanks, guys. Happy holidays.
Yeah, you too. Talk to you soon.
All right. 8:30 on the nose here, guys. Anything happening out there?
Anything?
It's very quiet from an overall market perspective. I mean,
Yeah.
you're down 1 penny on the SPY. The TLT is rallying. Remember, that's going to be put pressure on the banks. You look this morning, and you can very much see that the financials are weak. JP Morgan trading down 30 cents. Goldman's down $1. Morgan's down 20 cents. Citigroup. So you can see, the weakness there, just with the inverse relationship between that and the TLT. Disney is strong. You had some Disney numbers. Have we talked those yet?
Yeah, before we do, just real quick, boy, oh boy, that step down seller in Dollar Tree. Holy macro. We're now at $97 here.
Yeah, I was scared to call the bottom on that one.
Yeah, it was. It just, I mean, when you look at it, it's just stepping down. They're just reloading. So we'll see. Maybe that one you can catch the 929 and 29, 59-second print. And there's still that buyer out there in PANW, pushing it up to 231 now. Just a very, very patient.
I'd be more inclined to buy the dip in a Palo Alto as opposed to the dollar.
Yeah, just because there's someone there buying it, you got to figure whatever they're buying. If they get pounded again, they'll reload it. 228, 229. But Dollar Tree here
it hasn't stopped going down.
Not at all.
I mean, you're trying to be a hero here. We're still just leaking here. I mean, look at this Dollar Tree. I mean, why be the hero? Let's wait until the thing stops going down.
What do we get? We just made a low at 96.11. So you're working on a green candle here.
Trying.
You were trying.
That's the first one this morning.
Yeah, you're right.
It actually is. Yeah.
Well, it's
an
not
awful
over
looking
yet.
chart here
Looking
from
at
the pre-market.
Yep. So how are the other dollars?
Let's go back to what Ryan and what you asked. You asked the question to Ryan about obviously Black Friday trades here. You know what I found interesting? Amazon showing life yesterday. And we often see, and I talk about the event run up all the time and playing the event run up. And there is a trade often with Amazon that it is strong ahead of Black Friday. Started early yesterday, though. I mean, maybe there's the overall market, but Amazon hadn't been participating in the overall market rally for a long time. Now, all of a sudden, it started participating there yesterday. I mean, it was a very strong rally yesterday in the overall market, but Amazon up over 20 points. I mean, on a pullback here, and even looking this morning, Amazon's up another 4 points. Market's not, market's flat. Amazon's trying to trade higher here again. So, do we make a run for 1,800 ahead of Black Friday? Maybe.
I think Black Friday sales are going to blow it out of the water here.
And usually the numbers are pretty solid too that Amazon reports. So you typically have a strength looking back, and maybe it's just selective perception on my part, but I've always noticed a relationship that Amazon's usually strong a couple days ahead of Black Friday and into it. So we're already seeing it. The trade started early. Usually it doesn't start till the Tuesday or the Wednesday. Started yesterday morning. So I'd love a little pullback on Amazon to get in there ahead of the Black Friday trade because I think there's room to 1,800.
All right. Real quick before we go to our second guest, let's do this Disney thing real fast. Some third-party data from a company called Apptopia, a research firm. Apptopia says that Disney Plus is averaging almost 1 million new subscribers per day. So not from the company itself, third party, but that's a big headline. There's some other data here, but I have questions about what it really means, so I'm not going to read it to you. But that $1 million, 1 million subscribers a day, that's big, and I mean this is a story that won't die.
I subscribed. I'm one of those million on one of those days.
Yeah, me too.
You subscribed too? You ponied up the 9. Did you buy it for the whole year or did you buy it monthly?
Oh no, I got my parents to get it free through Verizon for a year.
Oh, you get the free one. See, that's what's really pushing the numbers too, is you guys getting the free ones. I actually, paid the $90 Canadian for the whole year. So my kids are watching every day.
I haven't even used it yet, but
I watched The Mandalorian, all 3 episodes. It's pretty good. The kids watch basically Frozen. They just love Frozen, so they watch the same movie again and again and again. But there's some stuff on there. I mean,
When are you going to take them to see
if you're a
Frozen?
Star Wars fan, you're going to buy it. If you got kids, you're going to probably buy it. Those are the 2 main people. What'd you ask me, Joel?
When are you going to take them to see Frozen?
Maybe Thursday, because I'm taking Thursday morning off to go to the Benzinga. We're going to the Benzinga parade party there Thursday morning. Maybe I'll take them Thursday afternoon.
That makes sense. They'd be open in Canada. That makes sense. So.
Yeah, I just
Are the theaters not open on Thanksgiving?
They are. They're open here.
They are.
I would think they are. I think it'd be a big day for them.
I stand corrected.
Personally, I'm going to go back to Canada because it's not going to be a big Thursday in Canada.
I'm going to go see Mr. Rogers' Neighborhood, I think, tomorrow night.
Wow.
Big plans.
Joe going to the movies. That's a rarity. All right.
Where is Mr. Rogers' Neighborhood playing?
Is
that a joke?
No, it's with Tom Hanks. That's the new movie. Okay.
Oh,
anyway,
I didn't even know. I didn't even know that.
So yeah,
Mr. Movie Guy.
Gotta get out more. Dennis.
I'm not really Mr. Movie Guy. I like the older movies. I don't really go to too many.
You didn't really
movies. Probably because I got the 2 kids. I don't get to other movies anymore.
We'll do it after our guest because I want to bring him on right now.
Sure.
So Scott Bauer is our guest right now. He's the CEO of Prosper Trading Academy, a longtime market veteran at CBOE and the CME. And Scott, can you hear me?
Hey guys, how are you? Good morning.
Good morning. How are you?
Good.
Before we get into this, Spencer, real quick, were you ever at the Merc?
I traded there for 1 year. I traded in the S&P 500 option pit for 1 year.
And that year was, well, you look a little younger than me.
No, I'm definitely not younger than you. I'll bet.
Yeah, you are. Everyone that comes on this show is younger than
I don't know if we've ever had a guest older than Joe on the show.
Either. I don't think so.
So I'll tell you the 1 year. You guess what year do you think I was there?
You look familiar. I think it was between 85 and 92.
No. Now you're dating yourself.
He's not that old. Now he's insulted.
So I hit the floor at the CBOE in 1991, but the 1 year I traded at the Merc was during the financial crisis when the Treasury first announced the first bailout. So I was in the pit when they announced the bailout the day before expiration.
Oh, wow.
Saw S&Ps rally, 80 points on that news. And in my, almost 30 years of trading, I've never seen the whites of traders' eyes like I did after that announcement. It was absolutely insane. Absolutely.
Who were some of the order fillers? So so it was a little bit later, right, that you were there? Do you remember any of the order fillers that were there?
At the Merc?
Yeah.
DJO was his acronym, and then the big guy from XFA, who's still there. I'm not going to name his name.
Okay.
If you were there, you would know him. I could tell you pretty much everybody from the CBOE, but my 1 year at the CME was, like a flash in the pan.
And what years were you at the CBO?
91 until, pretty much current time.
How about Larry Mertz or John Schuler? Do you know any of those guys? They traded.
What were their acronyms? You know from being a trader, a lot of people don't know other people's names, but they know their acronyms.
Shu was SHOO and Larry Mertz, I think, was MTZ. There you go. Okay.
There's my SIBO badge.
All right, Spencer wants to talk markets.
I have a question, Scott. I was looking through your bio here. It said that you were the only market maker on the CBOE to trade Amazon options in 97. Is that true?
100% true. Not only on the CBOE, but in the world. Because at the time, options were not multiply listed. So if a stock was listed at the CBOE, it was not in New York or Philly or in San Francisco, vice versa. Amazon got listed on the CBOE. And there's a great story behind it, but it is 100% fact. For about 3 months, I was the only market maker on the floor to trade it.
Wow. Those days are long gone.
Yeah, that's a lifetime ago.
That's interesting. All right, I want to get to this chart that you sent us. You were kind enough to send over a chart of the 10-year Treasury. I'm going to bring it up here. Why don't you show us what we're looking at?
Sure. So I love trading TLT, which is the 20-year ETF. But if you match that up to this chart here of the 10-year, the TNX here, you can see just an incredible, obviously an inverse relationship here going back 6-9 months. And we have in my classroom and for my students here, we've made 4 significant trades over the last, 4 to 5 months based on support and resistance and the range that the 10-year has traded in, basically from, the 150-ish up to 190. And we've played TLT off of that. And they have worked to perfection. So I know you actually in the previous segment, you just talked about a little bit of a rally in TLT today. And I look over here and it's trading 141-ish or so.
Yep.
So, what I would do is, okay, I'm going to look to see where does that correlate to the 10-year to see if I want to put a position on in TLT. And we've played it both ways in TLT based on where the 10-year has been. So we've been really bullish in TLT, when rates have gone up, and we've been really bearish when rates have gone down, and it's just worked out really well. So there's a pretty nice direct correlation there between the 20-year, the TLT, and how the 10-year is trading.
That's interesting because we talk a lot about relationships on this show, but that's not one that we've discussed. So this is really good because we don't often talk about. We talk about TLT as it relates to maybe like the bank stocks, right? Bank
of course,
America, but not TNX. So this is super interesting here. So tell us a little bit about what you're seeing in the market here, Scott, as far as just sentiment or feeling. I mean, how are you feeling?
So from the retail perspective, the sentiment is overly bullish, incredibly bullish, and you see people just saying, "Oh man, I wish I would have gotten in." 200 points ago, 300 points ago, 1,000 points ago in the Dow, this, that, and the other, and they're feeling that FOMO right now. From the professional, from the trader on the floor, and the guys that I'm talking to every day on the floor, both still at the CBOE and in the CME, they can't believe where volatility is, and they're waiting for kind of the bubble to burst here a little bit, not looking for necessarily, a big 10% sell-off or anything, but just an event that's going to make volatility pop here because, man, oh man, with all of the market risks that we have, inflated levels, geopolitical risks, U.S., China, you never know what's going to go on with the impeachment, trial. To see VIX trading at a 12 handle is just ridiculous.
I mean, you look at it down here, and whenever we get down to the 11, 12 handle, it seems like there's an event or something that will eventually pull us out. Is this just the time to buy insurance if you're long because the VIX is so cheap?
That's what I tell everybody when I go on the networks and just speak to my students. Even if you're not looking for necessarily a pullback, if you're not playing for a pullback, if you have stayed long in this marketplace in your retirement, whatever it is, not necessarily your day-to-day trading accounts, but your investment accounts, we always look for bargains, right? When you call up your insurance agent and you want a new deal on your car insurance, your home insurance, whatever it is, you always want a bargain. Insurance is at a bargain right now, and there is no reason not to lock in some of those gains, or at least have that position where if you do get a sell-off, okay, you're going to win a little bit here. I mean, this is, to me, it's ridiculous how cheap it is.
What do you think the catalyst could be to, and obviously we can never just guess on catalysts. I mean, it could be a trade deal, it could be anything, but, I look at this and I think, well, seasonality's coming in, usually December's a stronger month.
Yep.
We've obviously got, the Santa Claus rally at the end of the year that usually comes in. I mean, this is setting up and maybe this is why all the ducks are in a row and insurance is so cheap, because I'm struggling to really find the catalyst that's going to sell us off, even when, we have, the China deal, which looks like, maybe there's one coming here. I mean, now we've had, okay, well, there's no deal. I mean, even the volatility off that is muted now.
Unreal.
What do you potentially think could be the catalyst to knock this market down?
So let me just state first that I'm a glass half full person. I am typically very bullish. I am typically very optimistic. However, I do think that regardless of what happens with the U.S.-China talks with this phase one, if they actually sign a deal, I think we sell off. If deal falls apart, talks break down, I think we sell off. I think this is the perfect setup for the buy the rumor, sell the news type of event here. And to position yourselves, and I am not advocating getting short this market. I'm not advocating getting out of longs. I am advocating buying protection because it's so cheap. And to me, I love kind of the anti look at this, that buy the rumor, sell the news. And I think you got to take advantage of it.
What specific stocks, and let's just say, you don't have to give us names here, but just like talk sectors here, what do you like and what do you not like going to the final month of the year?
I don't like energy at all. I think that it's just been, we've looked at oil prices, you look at nat gas, and even though nat gas has been so volatile, it's still been range bound. Same with the oil specter, right? We've had that incredible range. So I think that's pretty muted here. I do like the financials here. They have weathered such a storm through the whole rate debacle. I really do like them. And even though Powell, again, came out yesterday and said, inflation is going to be muted at that 2% target, we're not changing rates anytime soon. You look at the big guys, the JPs, the Goldmans of the world, and even though they've really outperformed over the last month or so, I still like those. I'm a little hesitant on retail. We've seen some good reports. We've seen some really bad reports. I'm a little hesitant overall in the space, though. If I had to pick one stock in retail, and you guys just talked about it on the last segment, it would be Amazon, because, regardless of the overall landscape, I think they're going to do really well.
Because they're everywhere and everything, and in everyone's business and everyone's pockets. Scott, before we let you go here, I want to give you a chance to just talk about Prosper Trading Academy and what you do and sort of what kind of education you stress to your students.
Thanks. So I've taken my 20 plus years of actual floor trading experience and brought it on to trading on the screens, which most of us do here. And as a little bit of a backstory, I used to actually teach at the CBOE. I taught options for people that would come in. I taught at the OCC. So I've taken that teaching experience that I have along with my actual floor trading experience and brought it into a live online classroom. So myself and a few other instructors, we have live during market hours trading classrooms where we trade along our students. We discuss not only the markets, but we go through the education of what's behind a certain position, not just options, but stocks as well. We look for earnings plays. We look for volatility. We look for momentum, swing plays. And we are as much about the education here and teaching people the fundamentals so they can wind up making their own decisions as we are about the trading.
Before we let you go, you got a good floor story for us? Maybe something that shaped your trading career. It could be a good one, could be a bad one.
Safe for work floor story. Let's preface that. Something that we can,
Something we can have a little bit on the G-rated or at least PG rated.
Yeah.
Oh, something I can share with the family.
I don't know.
Disney rated.
Someone swore on the show the other day.
Yeah, besides the Amazon one, which was just an incredible journey, because the day that I walked over to trade in that pit, there was an announcement over the loudspeaker. It was July. It was the middle of the summer. And I was literally, honest to God, laying in my current trading pit, which was the Coca-Cola pit, doing a crossword puzzle. There was an announcement over the loudspeaker, market makers to Amazon. Nobody went over. I didn't go over. 5 minutes later, another announcement. I said, all right, fine. I walked over. So I literally started making markets just, by my head. I had no theoretical sheets. Back in those days, we had no handheld computers. So I just started making markets. And as anybody knows, yes, there's volatility, which determines the marketplace, but really everything is based off of supply and demand, right? Volatility increases, due to supply and demand. It decreases due to supply and demand. So, the experience that I had really allowed me to start doing that. And I'll never forget that one of the biggest orders I've personally ever taken down in the trading pit, they were February 70 puts in Amazon. A broker came in from Pershing back at the time, John Hafner. I don't know if you remember John Hafner or not. Anyway, he had 1,000 puts to buy. Okay. I am the only trader out there. So back in those days, you couldn't short Amazon. You couldn't, so if I'm selling stock or if I'm selling puts and I want to sell stock as my hedge, you can't do it because it's going to get called right in. He had 1,000 puts to buy. He asked the market. I give him the market. He says, I'll buy 1,000. I said, I'll sell you 10. because we were upheld by the law, literally, to uphold our markets up there for 10 contracts. He said, all right, what's the market coming out? Gave him the new market coming out. He said, all right, I'll buy 990. I said, I'll sell you 10 more. The new market coming out. And, it was literally just a matter of supply and demand. Finally got to that point where I wound up selling him 1,000 puts in Amazon. And here I am literally the only trader in there. And I'll never forget at the time, my partner's saying, what the heck are you doing? And I say, listen, I'm trading around it here. I got it. By the end of the day, with Amazon pretty much unchanged and volatility had gotten crushed, that broker came back to sell them all back out to me. You can pretty much figure out the rest of the story here.
Wow.
And another real quick one. I used to trade yearly when I was in the Coca-Cola pit directly against Warren Buffett.
That's great.
Yeah.
Oh, man. That's awesome.
Did you make money off Warren?
I made a lot of money off of Warren. And I'm sure he did as well. But remember, it's not a zero-sum game trading options. So.
Yeah.
All right, Scott Bauer, he's the CEO of Prosper Trading Academy. Scott, thanks so much for the time today, and have a great holiday.
You as well.
All right, those are two of our better stories we've had recently on the show.
That's great. I love it when we get the
that was tremendous.
The thing is, the guy, the broker puking him back out to him. I mean, that is that's so rare, to have take both sides of the trade. But good stories. All right, we'll have to get Scott back.
I just like it. I want to buy 1,000. I'll sell you 10. I
What
want to buy 990. I'll sell you 10.
So
that's what I have to sell you. That's awesome.
Would have went with both hands though, then he could have got hit with an unlimited amount. We talked about that before.
What's the biggest order you ever got hit with, Joel, when you were down there? You obviously were at Oldie too. What was the biggest one you were?
Well, for stock for stocks, definitely 100,000 share orders. Which aren't a lot of fun.
Still sounds big.
Yeah. But in the futures pit, I was a piker. I don't think I took more than like a 10 lot, but it was 10 times.
Because you were trading your own account when the futures pit
10
too, though.
Times,
so
500 times. There's quite a bit of equity. So I did see some, big orders in the 1,000 lot orders in the S&Ps and things. Not for me personally. From EF Hutton. I don't know if you ever.
Will some of the locals get big down there though?
I told you that one story where this guy was offering 1,000, and he kept on. He was trying to spook the market, get it down. And this guy Bill Grzinski goes over to him, and he offered him 1,000. He goes, buy him. And, and the guy's name was Mark. I won't give his last name. And he took the trade, and then he quietly walked out of the pit, and he went to another broker, and he said, work this on hell, get me out of these.
I did not want the 1,000.
Yeah, he did not.
I mean, this stuff, and we talk about spoofing, and we talk about layer. We talk about that on the show, and obviously they've really cracked down this after 2008, with fake orders. But the one thing about that, maybe the regulators don't consider, you throw 1,000 shares, or 100,000 shares to sell out there, somebody can lift you. You're in a high frequency trading world. They're still taking risk. I mean, they're trying to push the market down, and this stuff went on, like Joel just said, even in the pits back in the day. You can get lifted on those orders, and so there is a risk sometimes, where it's not just free money that's thrown out there, and 100,000 shares, and all of a sudden somebody says buy them, or they buy them on you in a high frequency. And now you're maybe didn't want to be short. You were trying to push the market down, and somebody bought them on you, and now you're in trouble. So. There's no free lunch, even, in these illegal activities that they've defined. I mean, there's risk involved in that too.
I think was another guy too, I won't mention his name, who used to literally take a shoelace, and he would tie the shoelace around his left wrist, and then he would tie the other shoelace around his belt buckle. So that way he could never go
up two hands.
He'd never go up with two hands.
So when you throw up two hands, that just means it's unlimited? That's what it was?
Yeah.
Did you ever see anybody do that?
Oh yeah. Well, I told the guy got hit on it. I mean, like a lot of guys, but if you even if you label your size on it, if you go through two hands up there, but so you can never. And then sometimes were
you one that tied your shoelace on your hand to your
I'd
belt
be
buckle?
These guys would be offering them down, and I'd have it hit my tongue. I go, buy one, and they wouldn't even look at you. They would just 10, 20, or 50. I'm like, no, I want one,
One.
They'd be like,
All right, we got distracted here. Joel, why don't you look at Disney real fast because we brought it up and then we never actually looked at the chart. So
it's over
Breakout.
150. Yeah, boy, oh boy. What are you gonna do now? 151.77, up $2. Holding the gains as well too. Up at the pre-market session, 152.25. No man's land here. I would just use that, that pre-market. I think it's going to open at 152, and then hold a little bit, and then maybe tail off a little bit. This is a big move for Disney.
I mean, I never like to be short stocks making new all-time highs. It's like a rule. Write that one down for page 7 of our book. Don't short stocks making new all-time highs. Don't buy stocks making new all-time lows. And so the stock's making a new all-time high here today. I'm still long in this, and I've obviously played it from the trading side a few times here as well. I've just been holding the core investment there in the long-term portfolio, and I'm sticking with it. I was, 3 months ago or 6 months ago talking when the stock was at 135. I thought it could be eventually a $200 stock. I still think it can eventually be a $200 stock, which is why I'm still long in the long-term portfolio.
Yeah, so just keep it. I mean, if you want to target 152.25 is your pre-market high. I don't know. I mean, there's got to be some stock in there in the book, right? Maybe the stock holds it down to get one of these sneaky opens at like 150.25 because of the stock in the book, and then they run it back up to 152. So that's a way to play it here.
Let's do here. You know what? Fitbit had a headline this morning. We were wondering why is Fitbit trading up? Well, a proxy filing came out late last night, and the filing was very long, and it detailed a bidding war between Google and somebody else. We don't know who that
This was
somebody else.
before Google got
Right,
the deal,
right,
that there was another potential suitor kicking around.
Right, exactly.
So it's still a done deal with Google, but the market always thinks, if there was another potential suitor, maybe they'll come back with a bigger bid. I think that's why it's trading up here this morning, and it just traded up to 715. I do not believe that is going to happen. I believe this deal is done. What is the final price? What did they end up giving them?
$7, wasn't it?
No, it's more. It was more than 7. I don't remember because it's cash deals. I don't trade them afterwards.
pros,
What was the final price? Somebody have it in front of them?
Yes, it was $735.
So this is still trading at a pretty significant discount, considering. I guess this is going to be a while there, but it's really $735. I thought it was $715. It's $735.
That's the price.
It's pretty good. At $678 close. I mean, you're starting to get a pretty good discount there. I don't know why this deal wouldn't go through. So maybe unless Google changes their mind. But anyways, the risk ARBs usually got these things priced out pretty well. So it's up here at $7 this morning. I guess there's still 35 cents on the table. I thought it was $715.
Let's look at ratings here. Aren't not as many today as there were yesterday. There were a lot yesterday. The one that Joel and I were kind of laughing at this morning is this upgrade to TD Ameritrade to neutral at Citigroup. Thanks.
Classic chasing price.
Well,
all right.
or chasing an acquisition. But
yeah.
Okay, so as far as ratings we actually care about,
the CMG is a big one.
Yeah, CMG is big.
That's a huge call from Cowen.
Cowen and Company upgrading CMG to outperform, raising the price target from 800 to 970. That's probably the call.
One of their best ideas, they said too.
Yep.
I mean, I don't get it. I don't get why this gets the premium. Then you start looking at where it's trading, and comparatively to where other restaurants are trading, this trades at a significant premium to where other restaurant stocks trading. So I don't totally understand that. But, the stock's been technical, unbelievable performer in 2019. Got to be one of the best stocks from one of the big ones. It basically doubled in 2019. Started the year around $400. We're up here at 800 here right now. So every pullback has been an opportunity. We got the recent pullback in October and November. That's just another buying opportunity here. So I guess, just buying on pullbacks works. I don't like chasing stocks, but the stock always seems to get life here again. And why not? Maybe eventually goes to all-time highs again. I don't understand it. It won't be in my long-term portfolio, but as a trade, it seems to be strong.
793 is your 50% retracement from that 856.75 high down to 728. You are trading above that. I don't know. I think you'll hang out around 800 for a little bit today. Pre-market high comes in at 805. So coming right into the 50% retracement. If you're looking for a gap fill at the start of the gap, you really want a juicy target today. 814.42 starts the gap, and then the gap goes up to 823.15. And I'm sure we're going to see that today.
Bill Ackman made a great call on this one, huh?
Yeah, you know what? We give Ackman some heat, obviously, and the Herbalife
He sold
deal and
some,
a
though,
few
didn't
other
he?
bad
Sold
ones,
some.
but he's been coming back.
He did sell some. That's correct.
Yeah, it's
So-
come back a long ways. I mean, okay, so let's go over Tesla gets a downgrade here today. It's from a smaller firm here, China Renaissance. Is that who it is?
Have you
They're not widely followed, but they are getting a downgrade. I mean, we got this one exactly right yesterday. You know, when this was 345, we were talking, you know, I don't flat out say sell anything. Obviously, we don't give recommendations, but I came as close to saying I did not want to be long this thing and potentially short. I wish I would have shorted the open. It opened and gave you zero heat. The thing came right down 6 points, had a little bit of rally there late morning, and then just kept selling off. That was a gift because you got the initial move and then you had to kind of pop back up in the pre-market, almost a 50% retracement. So textbook there too, looking at the 360 to 330, where it was trading was 345. All the ducks were in a row for a short on that Tesla yesterday morning, and it would have worked perfectly. 335 here now, trading down $1. I still think rallies to be sold in Tesla. I think Tesla could eventually, you know, be testing the 320 area. Still believer in the long-term story in Tesla. It just got too hot and the truck is ugly. I don't think the ugly truck trade it to the downside is over yet.
All right, just hanging out just above that old-time closing high of 31.3275 at 31.33. Mid-range on the session, it's all I can really give you after that spike to 31.45. That's 31 to 36.50. That's real minor resistance on the downside. Pre-market low 320, 31.28. That lines up as a good number, your daily pivot. Could see a little downside after that to the intraday low from Monday at 31.19 and a quarter.
All right, that's it for our show today. If you want to hear any part of our show again, hear our dulcet tones, catch our podcast, iTunes, SoundCloud, Spotify, pretty much wherever podcasts are available, or watch the show on benzinga.com/YouTube TV. Thanks again to both our guests, Ryan Craver and Scott Bauer. We appreciate their time. Thanks to those of you in our chats on YouTube and premarket.benzinga.com. Please remember, all the information from our show is meant to be used as informational purposes only and not for investing or trading advice. Everyone, that's it for us. Have a great rest of your day. We'll be back with you on Wednesday.